Small caps may have had a slow start to the year, but the Russell 2000 set a record high earlier this week. Can the group continue to climb? Let's see what the chart master has to say. So, Carter, what do you say?
My hunch is no, but let's get right to it. So first, what do we know? There are 1,956 constituents in this index. The whole thing is valued at $3.43 trillion. Next slide, guess what? That is less than Apple, as all will know. That's less than NVIDIA. That's less than Microsoft. So we're at a stock. The entire aggregate is basically the fourth biggest stock in the S&P. But let's look at the charts and try to figure out the way forward. So we have this well-defined level where we were 4 years ago, which means adjusted for inflation, it's down 15%. Okay. Do we or don't we break out? I think we get stuck here. But what's most important is how poor the relative performance is. Let's look at some relative performance charts. These are two-panel charts. And so if you're sideways for 4 years and the market is up, you're an underperformer, a massive underperformer. And you'll see that in the next iteration. And in fact, the Russell 2000 launched in January of 1984. And it has been a chronic and perpetual underperformer of the S&P since then. So the notion that small cap stocks outperform is not proved, at least if one uses the Russell 2000.
It's funny. I seem to remember Tim once saying that he hates the Russell 2000. He will never invest in small caps.
Hold on. I'm being misquoted here.
Okay,
but small caps to me are a little bit like the color brown. I see no reason for them. I see no reason. If you have a couple small cap companies you want to own, do the work on them, go buy them. But why do you need to have small caps as a part of your portfolio? I don't get it.
What did Brown do to you?
You know what?